Welcome back, ladies and gentlemen, to the coziest part of Solana's finest podcast, Sol Brothers. Markets, prices, charts, and technical analysis. Let me tell you, we got shit to talk about.
Yeah, the charts have not been very pleasant to look at over the last week. Actually, the last couple of weeks have been a little rough. You called it. But yeah, looking forward to you telling us what the fuck is going on, Simon.
That is an amazing question. Let me just arrange my charts here, and you can pull up my screen and we can take a look together at starting with the Solana prices here, because obviously that is the mother of it all. Solami is now sitting at $155 as of today. It is the 13th of November, to be concise here, and we are trending downwards. We're trending downwards after having broken the Simon support line here on when was this? This was on the 2nd of November. So just at the beginning of November, the end of Downtober and the opening of Moonvember was not a moon opening. We crossed that line, and since then it's downhill. Honestly, since then it's downhill, and it doesn't look completed yet. That is my 2 cents on the charts right now. The formation here does not give me indications that we have found a local low. That means we can drop lower. So looking at the chart here and at the substructure in the charts, there's one significant wave count that I want to point out here, which is the red 1, 2, 3, 4, 5 setup here with the brackets. So basically we had the first leg down that was testing the Simon support line. Then we had a quite shallow recovery to the upside in a wave 2. We barely hit the 0.5 FIB level with that recovery. So that's already kind of a bad sign. If you have a drop and then you don't have an impulse up, then the market is trying to actually turn the trend, which was happening here to the downside, because after that little recovery we saw an impulsive downside. So that brought us definitely through the resistance line, and then the market just started selling off, because obviously people were afraid and they were like, okay, where's the next support? The next support was found here at this green line down here, which is basically the FIB extension for this third wave, the 1.786, and we got stopped out over there with some wicks, and then the chart started to go sideways, and that's where we're in right now, in a bit of consolidation, sideways confusion, I would call it, and that is usually what happens in the fourth wave. If you've been listening to Sol Brothers doing TA, then you've heard me saying this a few times now. So we see the sideways movement here. It is playing out in an A, B, C structure. The C might have topped already here in the resistance to the upside. So these FIB levels here are basically the fourth wave resistance. And we touched the 0.618, the most significant FIB level, perfectly. So we touched that level, and now we're on our way down basically from here. So usually these fourth wave can be quite confusing. They can also span for some time. So there's no reason why we couldn't see another leg to the upside. We could even go a bit higher than $170 here and still stay in the same structure, the same wave count. That could happen as well. So a lot of times in these fourth waves, traders are just they get taken out because they think, okay, now we're dropping, but then we're going up again. And then you think, okay, now we're turning up to the upside, but then we drop again. So these fourth waves are a bitch, to be blunt. And right now, if the C wave is over and we're on our way down here to the fifth wave of this 1, 2, 3, 4, 5 structure, then this was number 1, and we're right now in the number 2. We're going to find support between $160 and $163 or $164 probably. And then we're going to see another sell-off to the downside. So that could happen at any moment. Now, a few facts why we might turn around earlier, and this wave count could change based on macro news and Bitcoin chart. Obviously, since we have some positive news in the macro world, especially when it comes to the US government, this helps us right now to stay afloat, I would say, and not dump further. But it doesn't need a lot as of now to dump further. So we only need a few triggers and it would happen. On the good side of things, though, I mentioned it already on Monday this week, the Bitcoin chart did close its weekly candle on Sunday night above the 50-week moving average, which was needed to not open the bear market. It's a very significant close here, candle close. And now we're in the next weekly candle. Obviously, we have 3 more days to go on that candle. We're right now hovering exactly around that 50-week moving average, that significant point. And we see historically that there is resistance and candles are hovering around that, and candles can break through it, but they don't close below it, at least not in the past. Because as soon as we do break below it, that usually leads to some more significant downside. That was actually a really good scenario to make an example of that in 2022 here, where we ended at $70,000 Bitcoin. Then after testing the 50-week moving average once before, a few weeks earlier, we do a new high, we retest that level. The candle doesn't close below it, but we don't manage to get an impulse to the upside again. So we're doing this consolidation, and then we're breaking significantly down. And then for 1, 2, 3, 4, 5, 6, 7, 8, 9, a couple like significant time, we're staying below there. We're retesting the 50-week moving average, and we go even further into a proper bear market. And we saw levels as low as $15,000 US, if you recall that time, back in 2022, end of 2022. And now we're here, right? Now we're here at this point, and it is tricky. It is tricky. There's no reason why we can't see another upside, okay? There's no reason why Bitcoin can't do a new all-time high in this cycle, but it would have to happen now, honestly. It would have to happen now because there's not much time left. Like if we can't sustain this level at around the $100,000 mark, very important psychological level, and if we can turn around here into this last fifth wave to the upside, then the 125K we saw in October might have been the Q4 high of Bitcoin, and it might have been the fifth wave of a count, and we restructure this level a little bit, and we're now basically starting our decline here. That will bring us further down towards new resistance levels that can go as low as here this liquidity pockets that we have here around $65,000, where there's a lot of liquidity usually and volume in the Bitcoin chart. So that is kind of the next significant level. And it could happen, right? Before that, we have resistances around 75K, and we have resistance around 98K, which is the next, the first level that needs to be broken to confirm further downside. So with all that being said, ladies and gentlemen, it is not easy right now looking at these charts to make sense of everything. And I know that me talking about these things doesn't help a lot to identify trading setups right now, because there are no great trading setups as of now. And also, I don't have the magic ball, right? We can't tell you where the price is moving next, but what we can tell you is at least our take on the wave counts. So yeah, that's it. That's where we are these days.
So obviously things are not looking all that attractive. It might go up and it might go down. That's based on my own professional opinion. That is financial advice. But if just to recap what Simon said, just very succinctly, we are at a very critical moment right now, where we're need to find support over at the $100,000 mark for Bitcoin. And if we can't do so, that might be a major downer, and we will be in a long-term bear market. See you later. Thanks for playing. Thank you for joining the world's worst cycle. But that's A-okay.
It is true. I mean, it's not heavily okay. I prefer us to stay a bit more afloat. I don't think we're going to enter a bear market that brings us down to 20K, by the way. Like if prices turn in the other direction, then we will just go maybe revisit the 75, maybe even the 65. We're going to bounce around there for a while. It's going to just be boring. It's not going to be hard, sell off to the downside, only if something really significant happened, black swan, that we can't see right now. But other than that, I think we're just gonna go down and stay there for a while, and nothing huge is gonna happen. We're just gonna range. It's gonna be a range bear market, basically, not an impulsive leg to the downside. Similar to how we haven't seen an impulsive leg to the upside in this bull cycle. It's just the way the world works right now. But yeah, those are the prices,
So there are some fundamentals that we can talk about that might inform what happens over the next week or so, right? So the first thing I want to talk about is definitely, this is a big one. We finally have the end of the U.S. government shutdown. Yes, Simon, it has happened. 60-40. The Senate has passed, a budget that the government can operate on. It is the longest government shutdown in American history. Much like global warming, the extremes will get more extreme, hotter and colder. I think I would not be surprised if we saw another government shutdown by the end of this administration. It's been a long time in the making. Obviously, lots of blames and aspersions being cast on both sides. But ultimately, what swung the needle is that 10 Democrats broke with their party. They gave up on some pretty key asks to the Republican Party. And so the Republicans were able to successfully refund the government. And so now we have a 60 in favor and 40 against, exactly the amount of votes they needed to pass a budget. It will now go to the House of Representatives and then signed by Donald Trump.
Well, that is definitely big news. I couldn't believe it because we have been actually it's been a 43-day partial shutdown, longest in U.S. history, if I'm reading that right here. That has been now wrapped up literally yesterday, or even today on US time. I know today. Yeah, okay. I mean, right now it's quite early in US, I guess, or late at night. But I think this is historical, honestly. This is almost cinematic what is happening. Like it reminds me a lot of what is it? What's it called? This politics Netflix series they were actually great. I don't remember what it's called.
House of Cards?
House of Cards. You get a good touch and feel of how could it be behind the scenes. I don't know if that's reality, right? I haven't been there in Washington in the White House, but a lot of schemes, a lot of political. You gotta love that game because if you don't love it, I think you hate it. There's no in between. If you're part of that house of that House of Cards in the U.S. government, then damn man, like it's tough. It's tough, honestly.
I mean, basically, I think the real headline here is that man solves problem that he created. Let's give him a big round of applause, everybody. It's like, okay, whatever. Yeah, like a big baby. You heard about those $2,000 what do they call them? Tariff checks, right? So that's like another thing that the Trump administration
they call it tariff dividend.
Dividend.
Just a household kind of payment, really, to give back. What is it? It's kind of a ref share, right? To all ID holders of a US passport, I believe.
I mean, I haven't double checked on this, my friend, but like if I follow the money, I promise you it's not coming from tariffs. Okay. It's coming from money printing. Money printing go burr. Okay. Do you think that's bearish or bullish for Solana?
It's bullish, actually. It's bullish for crypto and Solana, and it is bearish for midterm to long-term world economy and the safety of our whole system, really. Because the more you do these things, it has effects, right? Like you're not fighting any causes. You're always fighting the symptoms. And imagine you have a very important sickness in your body and you fight your symptoms for 10 years and you never care about the cause. You're gonna die, right? Sorry for the news, and that's literally what U.S. government is doing to fiscal and fiscal policy here.
I can't wait to see an extremely weak US dollar and all of our USDC is worth shit. Anywho, another piece of exciting news is the Treasury Secretary of the United States, Scott Bessent, announced today that the U.S. Treasury and the IRS has issued new guidance giving crypto exchange traded products, ETPs, a clear path to stake digital assets and share staking rewards with their retail investors. Now that is fucking huge. I'm pretty sure that this administration, for all its faults, I begrudgingly will admit, has done wonders in terms of crypto regulation. It's easier now more than ever to register crypto ETPs. And they've also released very clear guidance about how staking is not a security, right? It is a participation in a decentralized network. So thank you very much for your service. So this is pretty good news.
I mean, US is that you got to give it to them. Like, obviously, there's a lot of bullshit happening, but they're also moving fast now when it comes to crypto. They have their motivation and incentives behind that, right? There's an agenda, but still, it is good for crypto. It is good that they want to be the crypto capital of the world, and I can attest to US right now really being the leader to when it comes to regulation, regulating this stuff, right? Europe has looked like they are setting themselves up, like always, right? They're always talking about things first, and then they're the first that really move on something, I feel like, but then they do it right with Mika and so on. They do it really proper, and then it takes ages and until it's implemented, and it's very risk averse and so on. While US, they just need to get that moment where they're like, okay, let's just fucking do it, and then they fucking do it. And that's in the past 8 to 12 weeks, we've seen so many positive news really coming from the US government when it comes to crypto. It's insane. And Europe is right now, there's a reason why we have 6, 7 Solana digital asset treasuries, all NASDAQ listed. They're all in the US, right? So there's a reason for that, because it is a bit tougher to do that anywhere else right now in the world.